Hello traders, Gary Wagner here, just before 10:30 in Honolulu, 4:30 in New York. It is Monday, April 25th, 2016, and we're looking at the Dow Jones Industrial Average, which is just closed and is settling now. It will close under 18,000 on the day, 17,977. Standard & Poor's, of course, also trading lower on the day at 2083.25, puts it down about 3 points on the day. The low 2071 and the high 2091. So we're closing roughly midpoint in terms of the range, midpoint of the range on the day. So, as I have said, the Dow Jones Industrial Average has closed back below 18,000. Standard & Poor's trading 2083.50, puts it down about 2.5 points. We are looking at a daily chart of the Standard & Poor's 500. And this, of course, is the E-mini. And there's absolutely no doubt when we take a look on a technical basis where we have run into resistance, we can see that we have really strong technical data of this particular price point as a resistive area, because on two occasions, once in November and the other in December of last year, really provided us with this data, because as the market came to this price point on both occasions, it was not able to track above it. And we are getting that. I would imagine that we should retrace, and we will retrace to a point in which we will have a really decent buy opportunity in the market. And in terms of where that area is, this is what I'm looking at. We want to take a serious look in terms of two different levels. The first level has got to be at roughly 2049. That is a 23% retracement of the fib retracement sequence that we have here. There's also the possibility that at roughly 2060, we could see some support come into the market. But genuinely, and I'm looking at this bottom here, my sense is somewhere between 2050 and 2060 is where we would want to look, in what area. But realize, traders, even with this small correction, we are still well above the 200-day moving average, and the 200-day moving average doesn't come in until about 2000. So if we had a deep correction in the market before going higher, that would be the price point that I would look for. In terms of other markets that we do look at, I've just pulled up a daily chart of crude oil. Crude oil trading off over 1.5% on the day. $43 per barrel is our current print to 42.64, puts it off about 70 cents on the day. And the one thing that you can see in terms of a technical basis, again, when we go back to October and September of last year, you can see where this particular price point, meaning around 44, 45 a barrel, between, call it 42 and 44 a barrel, was a very supportive price for crude oil until it broke. Of course, when it broke, it took a stab, but resistance came in and it found headwinds much prior to that, in fact, at around 43, and that's when this market kind of fell out of bed. And then, of course, we've identified this W pattern that is evident in both the crude oil market as well as in the Standard & Poor's. And so, traders, lastly, do want to take a look at the dollar index today. Under pressure, not tremendous pressure, not significant pressure, but pressure nonetheless, down about 1/3%, down 0.311 to close at 94.80. So just below 95 on the dollar index. Now, I still believe that we've got the potential for this market to find some support at this 93.80 area to 94, roughly in that area. And we did see the market come down under extreme pressure and bounce off of that. But now we're getting a little bit of headwind, as you can see. And this particular price point isn't something that comes up with a lot of technical data, 95 on the dollar index. But nonetheless, we could see it trade in a range-bound manner. But I do believe that we should hold, in terms of a straight support level, 94 on the dollar index. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow on Tuesday for another Trending Markets. Bye-bye.